All right, guys, good morning. Good morning. Welcome aboard to the Morning Note. My name is Carlos Garcia, founder and CEO of Guard Capital. It is June 28th, Friday, 9 a.m. Eastern Standard Time. Glad to be with you this morning. Every morning, 9 a.m. Eastern Standard Time. Make sure to hit that like and subscribe button. Really do appreciate that and the support. Let's go ahead and do it. So Dow futures are up 17 points this morning. The Nasdaq is slightly off their highs. We were hit as high as plus 100. We hit 2178. We are at 2085. We just had the core PCE number hit us that wick at 2178, and then we pulled back rather quickly. S&P 5557 up 11 points. Russell is leading the clubhouse up 0.86%, 2077. 10-year treasury yields 4.269%. The VIX is up 1% at 1236. Crude oil quietly having one of its better months, up $82. Now again, I am maybe just too early on that oil trade. Um, Remember, we have the summer driving season, so maybe crude oil does push a little higher. We'll take a look at those charts here in a moment. Gasoline futures are up 0.53%. Gold is up 0.44. Silver up 2%. Remember, the dollar is below 106. Copper is up 1.33%. Bitcoin and Ethereum are flat today in terms of futures. In Forex land, dollar yen pulled back 26 pips. So that's where we are. What you're seeing here is our live market block quickly on the PCE number. 0.1% month over month hits expectations. This is the personal consumption expenditures. So this is the Federal Reserve's quote unquote preferred inflation gauge. So that just met expectations. The PCE price index unchanged. Personal spending rises 0.2%, estimated up 0.3%. This is the lowest since 2021 on a 2.6 core PCE. That's pretty positive. So we need to understand, I wrote this here, we need to start looking at September for the next rate hike, or rate cut. 0.25%, which would be 25 basis points. A rate cut is to be expected in September, my opinion. We will take a look at the market from that perspective here on forward. So let's see how the market reacts. So far, positive, but pulling back after PCE. So we'll see if that price action continues, if we kind of stay choppy, which we have been lately, except for a couple individual names. But we'll take a look at it here in a moment. Good morning. Good morning. Let's go ahead and take a look at Tesla. So Tesla, we have the 220 calls. We tagged 200. So your next big resistance is right at 205, 205.72 or so. The gap fill is right there at 206. So let's see if we can cancel that alert. I'm going to cancel all my alerts actually because there's no need. Let's see it. Okay. So let's place the alert again as our target at 206.58. That's your gap fill from January that we have yet to fill. Remember, we got this wedge breakout that I talked about. We broke this down for our members. Go to watch this in charts. It's a lot of stuff, I know. Here's Tesla right here. 195.02. We're trading right now probably at 199.70. So a nice move higher. All the breakdown is there for our options members. So again, I fully expect us to break 200 this morning. We should be able to take profit on Tesla today. If we get to 201 or maybe so like that, we'll probably get 40%. Just because of our expiry is for July 19th. So again, we're trying to buy time so we don't get screwed on any kind of crazy price action. So 206.58, that's the gap fill. That's going to be your first target. I want to go ahead and continue to ride Tesla longs, but we need to break that next. And remember, this is the same channel that we talked about. This was a hated stock back in April. If you guys remember on that earnings, and we were long and we played calls and we said you got to defend at 140, and we did. We're now about what? $60 from the lows. Not bad. Look, 206.58. What's there, guys? The 200-day moving average. That is going to be the target for pretty much every trader. 206.58. And more likely, we'll tag it and we might reverse a little bit and pull back. So we need a daily closure above that if we want to continue to ride this train to 227, if we're just playing the technicals here. Let's take a look at Amazon. A lot of people caught it. Congratulations. I'm happy for everybody. Obviously, this is part of the watch list, and you can see the 4-hour chart. I mean, pretty nice. I mean, what more can you say? If you're talking about continued upside, 208 or so, again, if we're finding this trend line here as a target, does that mean you should buy calls here on Amazon? I don't think so. But 200 being a pretty, looks like a pretty hard ceiling of resistance. And we tagged 199.84. We have yet to tag 200. So looks like it's the race to 200 for Amazon and Tesla. We'll see who gets there first. Nvidia pretty much choppy, sideways action. Not much going on since Wednesday morning's open. Thursday was just a slop fest. So that's where we are on those two trades. And then let's go ahead and wrap up at least this segment with crude oil. Crude oil is that it's still, oh wow. Crude oil actually has a death cross, guys. How's that? Look at this. The 50-day is below the 200-day. Wow. I guess lower gas prices are coming. Right now, we're back above that trend line. Looks like we're setting up for a possible inverse head and shoulders. So you want to be careful, but this death cross here is not a good sign for energy. So we may get lower prices in the summer, even though I thought, with summer driving, you know, uh, bringing up prices usually because of demand. That is not a good look so far. So we'll keep an eye on it. Nike also reported earnings, had calls last week that didn't work out for that gap fill. Remember we talked about that trend line yesterday? Well, we're breaking below that. We're now at 79.15. So now you're probably asking yourself, Carlos, where the hell is support? Where am I buying my next Nike stock or am I adding? 68.14. That looks like a nice level of support. And that is right near the COVID lows. Not many companies have tagged those COVID lows. So be prepared that at 79.15, that does not hold. We may get a lot of shorts covering. So you may get an initial bounce, $85, $83. It happens that way. Totally fine. We've had that on multiple stocks that had bad earnings or bad reaction to earnings. So if you're someone who was short the stock or bought puts, close your puts, enjoy your money. If you're someone that was looking to buy shares, 3-day rule in effect, as always, you should always wait 3 days after earnings before buying the stock or even thinking about it because you got all this volatility in the middle of that after all of that earnings. So, best bet here is just to wait. I don't want to trade options on Nike at this moment. So, I think the best bet, again, if you're not sure, just wait. All right, here we go. Questions and answer segments. Let's see. Good morning, Bear Mike. Bear Mike is part of our options signals. I'm glad to have him. He was asking questions this morning. I mean, who else doesn't love to read about this stuff? Wake up in the morning, check pre-market, check the news. It's always fun. TGIF, Painless asks, Palantir and Mara, please. Yes, Palantir and Mara. Palantir 2561 is going to be a very key level. We need to break that. If we do, then we can target 2661. We don't have to buy that strike. We don't have to buy 2650. We don't have to buy 27. You can buy the 26s if you want. Let's wait for that alert first. That's right on my watch list or what I'm watching. And MU. MU, obviously, because of earnings, we had that reaction, even though there was a good report, but guidance wasn't the best. I guess not what the market wanted. I drew that red line as resistance, and then we tagged it, chopped around, and then we finally broke out. So a retest 130. Let's see if we can hold 130. And if we do, we can play long to 140. That's your earnings gap fill. So in order to confirm this, we need to get above 136.81, 137. That's the 20-day alert placed. Let's see if we get there. I say we do. Monday, first Monday or first day of July, usually historically speaking, is pretty bullish. So I will not be surprised if we start getting a little bit of positioning ahead of that. July gets seasonally very strong. Let's go over that here in a second. We'll go to Live Market Blog. Seasonality has been a tailwind for U.S. stocks in July, which has averaged a 2.3% gain over the past 20 years. This makes July a month of potential profitability and market momentum. Just in the past 10 years, look at that big green bar. November is usually the best, but you could see here in an election year, July, it's still up, but not as much as just in the past 10 years. So again, there's different types of minutia when it comes to this data. But all in all, you can see July is very, very strong. So just prepare. Let's see. Thoughts on NVIDIA, Carlos, and stock purchases in advance. Thank you in advance, Carlos. You're welcome. All right. NVIDIA, again, we're just pretty much chopping around there, at least on the 1 hour. You can see the last couple of days, just a nothing burger. Use 122.44. That's kind of the support that I just put an alert there so I just know. But really, your support level is right around 115. The ultimate goal is if NVIDIA falls, crossing fingers, is, not talking calls or anything like that. We're just talking about investment. You can get to $100 a share. I know it's a big ask, but remember, that's $1,000 a share pre-split. So that was kind of a level, if we can get back down there, we'll see if we can take a look at something. But I don't know if we're going to get that low. I think worst case scenario, we get to 115. That might be a place for anyone who wants to kind of buy some NVIDIA on a discount, that'd be a good start. Again, knowing what we know with seasonality in July, NVIDIA will obviously be a part of it. It's too big not to be a part of it in terms of the S&P. Yeah, we're talking about Palo Alto. All right. Palo Alto, this is from Bear Mike. He asked me this morning. 360 is the target. That's that gap fill. Remember, we traded Intel. We traded Nike with gap fills. It didn't work out for us, but it did work out with Starbucks and what was the other one? And Target. So 2 out of 2, 2 out of 4 when it comes to gap fills from earnings. So what you need is to break the daily wick of around 345.59. If you can break that, yeah, you could target the 360 calls. It might be a little pricey, but that's pretty much the best you're going to get. SMCI, take a look at this. Still the wedge breakout. False breakout, been here before. False breakout, been there before. But above the 100 day, that's still a good sign. Look at that. Bounced off the 50 and the 20. I think SMCI still has more to go. If you're looking to retest the highs, that's 1229. Not bad. I still like it. NVO is a tougher one. Why? Because it's at all-time highs. Not much you could do here. So, I mean, you're pretty much at that level. I think you're better off skipping it. It's not much of a discount to do here otherwise. And I don't think they'll have tons of options volume personally. It's not a name like an Apple, Tesla, NVIDIA that has all the options volume. Target, please. Looks like a clean potential breakout. Let's take a look at Target. As long as you're above the 200-day, right? We talked about that. We filled the gap. Hallelujah. We'll do the rule drawing. Perfect. So we're probably looking at it here like, okay, what's the next move? I have 181.99. And the reason I have that is because this will confirm your inverse head and shoulders. These two lines will be considered shoulder line and your neckline, right? You can see your left shoulder, your right shoulder, your head. But in order for that to actually work, we need to hold above 130, or at least, well, make sure 138 for sure. 130 being the absolute low we can go because then we're going to short to 112. But so far it's holding up. But in order for anyone to do anything, in my opinion, you still need to get out of this slop of 181.99. I still like Target, by the way. Good morning. Thoughts on Google? Good old Google. Yeah, I mean, all-time highs. What more can we say? This is where it gets tough because when you're at all-time highs, where do you go, right? Amazon, we weren't at all-time highs yet. We finally broke out of them and we rode that wave. Tesla's not at all-time highs. Nvidia's not at all-time highs. When Apple hit all-time highs, I mean, we tried to short and that didn't work with puts. It hit the Friday of OPEX. Imagine that. So frustration station. But Google, I mean, at this point, really what you're looking for is hopefully a pullback. But you really can't do much here when it's all-time highs unless you know a specific target that you want to hit. But even that's the case, I think there's better opportunities. Nothing wrong with Google. I just wouldn't trade it here. Airbnb. Got a gap to fill here at 155.57. So the 155 calls are definitely something to keep an eye on, depending on the volume, obviously. Let's take a look at the hourly. Again, just kind of slop chop. Not much, but it's still up. But you could see just no momentum, just slowly grinding higher. So again, we'll keep an eye on 157, but I wouldn't trade that. Doesn't look that great, in my opinion, other than a small gap. AMD. Mr. Catch Up AMD that I've been waiting for. Waiting for AMD to join the party. All right. So first things first, you got to get above this fib level. And again, you're probably looking at it like, what are these lines here? That's the previous all-time highs that we had. If we go to the weekly, you can see that was the all-time high from 2022, right? And then we keep that Fibonacci level. Broke out of it, obviously, I can always update it. But if we're doing the gold Fibonacci extension, oh, I have to flip that. I'll flip it. But yeah, either way, you could see that break, pull back, and you're just kind of hovering around where previous all-time highs were. So if we take out all this stuff, let's go ahead and just make it clean. Let's do it together. Ah, let's do this. Remove all old drawings. Oh no. Remove drawing. We'll cancel this alert. Remove all this crap. All these lines on the screen. I know this can be very distracting. You just get used to it over time. So let's go ahead and remove this drawing. Remove all this stuff. Trying to make it as clean as possible. Because people always ask me, so how do you look at a chart? What do you put? What are your indicators? Such and such. And I think everyone's trying to look for that magic bullet. Like, what's that magical indicator? And you already have them. They're called your eyes. So those are your best indicators. So we're going to do a Fibonacci extension level based on the largest time frame, well, the easiest time frame to show the past 3 years, right? So we'll go to drawings tools. We'll go to percentage. So we want to do it based on the previous all-time high. That's one way to do it, or we can do it by the most recent. So the one before I had was the recent the 3-year all-time high to kind of give us some perspective. So let's kind of use that because that what shows us the break. So we're going to go from 100 to 0, 54, 57, and then we can adjust this. So right click it, edit properties, 54, 57. Sometimes your mouse can be maybe sensitive or so. Look at that. We got close to that golden extension Fibonacci level from the previous all-time high, what, 232? And look, we're just back to where we were in October of 2022. Pretty similar. Now, do you think this is a, double top formation, even though we already broke it? Again, guys, we keep knocking on the door. You're going to go higher. I don't believe in triple tops. This isn't a triple top. But again, if anything, triple tops, they usually signify the delay of the inevitable. It just happens. Triple tops, triple bottoms. You see a triple bottom, you're breaking down. You see a triple top, you're going to break. It's just what it is. It's just that force pushing higher for the higher prices. So with that being said, let's place an alert back at the previous all-time highs from 2022, 164.46. If we get there, now we know 169.89. That's your 20-week moving average. Let's go to the daily, and you're right there above the 20-day moving average if we break 164.46. If we do, then we're looking at the 170s, 175s or so. If we're looking for a little more of an extension of how high we can go, short term, 185. So about a $20 level from that break, but got to get 164.46, guys. Rivian, after the Volkswagen news, it's a tough one. Not going to be easy to trade. I say personally, if you just want to do EV trading, stick with the king. Stick with Tesla. Tesla has a better chart than Rivian. Tesla obviously has way more volume than Rivian and market cap. We know the drill. Listen, nothing against Rivian. I get it, but I want to stick with the market leader. And on the daily on Rivian, you just rejected the 200-day. So if you can get above that, let's say we want to trade this thing. Why not? We've done it before. 1685. If we break that, you got a gap to fill at 23. I think if you break 17, we can do the 20 calls if there's volume. I think that's fair for everybody. I went over pen already. Again, Palo Alto Networks, guys, is just a gap to fill. We need 345.60. Let's take a look. Meta. Oh, hey, Conwap is your son. Very cool. That's a family affair here. Meta's going to break out. Well, the thing with Meta is that it was either them or Amazon at that point, the pick. And they're not in the same sector or anything, but they're high mega cap stocks. Meta's just expensive to trade with options, guys. That's really the only thing. 532, that's your really target. Those are probably already set in stone. The question is, do we get higher? And the question is, how much higher, right? We don't know. So I have to reverse the fibs again. More than likely 550. If you want to take a walk on the wild side, the 550 calls would be it. They're just very, very expensive to send as a signal. That's all. Would you choose AMD or MU for a long? AMD. Long term. Absolutely AMD. Cheers. Thanks, Dylan. All right. All right, I think I got everyone's questions. Lucky Bamboo, good morning, Carlos. Thoughts on Google? Okay, I already answered that. Oh, you guys came in hot today. Awesome work, guys. Glad to get see if we get a couple of W's on the board. It's been a mixed month, but I'm ready prepping for July, and we got a lot of making up to do. So again, let's stick with the fundamentals. Let's stick with what we've been doing, what's been working for us for the year, step by step. I think we're going to be fine. So let's see if we can end the week and the month with a W, possibly Tesla, looking like it. Amazon was a great trade, and then Nvidia comes around, we can catch that too. So we'll see what we get. Have a great rest of your morning, guys. I will see you guys this weekend for our recap videos. Make sure to subscribe so you don't miss them. Cheers all.